Hey everyone, before we get to the charts, we've got another free ebook here. We're going to put the link in the comments of this video. It's about improving your trading psychology, and it is fairly in-depth, worthwhile information, worth checking out if you have not done so yet, and you haven't because it's new. Click the link. So the S&P 500, the bears have followed through now with our 3 reactions to the FOMC, and the bears won every single reaction. They won the reaction when we got the 50 basis point number. They won the reaction when Powell had the press conference. They won the reaction in a big way today, the most convincingly, with the big money reacting to the information from the prior 2 days. So clean sweep across the board for the bears. Bears could not be more pleased with how we have traded since the CPI reaction. Now into tomorrow, we've got OPEC and SPY dividends going to be distributed. So we're going to have an artificial drop in the price, which means for me using the futures charts even more, focusing on them even more. And we're then 10 days left in the trading year. So we're now watching, now that we've broken this low, this is the lowest price we've seen in a couple of weeks in markets. And the question is, are our monthly lower highs being set? We'll look at that in just a moment. We had a bunch of people in the Chart Guys community keeping an eye on these wedges, and they are breaking bear. You could adjust it a little bit. If we're green tomorrow with a decent green day, you can play around here and, adjust this a little bit to have it so it's still holding and we'll still pay attention to it. But if we're red tomorrow, for me, that's going to be a convincing. We broke that support line. We'll keep an eye on that resistance line maybe in the future, but that'll be off the table at that point. So monthly time frame, again, 10 trading days left in the candle. So however we close December, if we then break the low of December, it'll just be another monthly lower high. So lower high here, lower low, lower high, lower low, lower high. Are we going to drop to a lower low? That's the question from here. If we look at our retracement sizes on the bounces we have seen on the way down, we had about a 70% retracement on the first bounce. We had about a 70% retracement on the second bounce, and I'm just measuring from where we came from to the low, the size of that bounce. And so now on the third one, from where we came from to the low, it's a more significant bounce, percentage-wise of retracement, which increases the probability that we can form a higher low. It's more likely that we form a higher low this time than the prior 2 times because the bulls have more space to work with. That doesn't mean we're going to, but that's where I'm keeping an eye on this 2-week chart that I've been talking about. I forget when, maybe last week. This is the chart for me. There are 2 paths forward for Q1 2023. And again, it's either the bear break. Well, there's 3 ways. Straight down to a fresh low, fear back on the menu. Equilibrium, where we pull back 50% plus, but we hold the low and we tighten up, and that could play out for a couple of months. And number 3 would be the inverse head and shoulders that I've talked about, where we hold the low and then we break resistance. And that would be the first notable shift and notable win for the bulls in a while. If the bulls pull that off, my probability of a bottom being set increases very significantly. If we're just in a monthly downtrend, I don't have a lot of confidence in a bottom being set. So now we watch the retracement size of this pullback. And at this point, we are at about 39%, right at the 382 retracement. If we get over 50%, at that point, the bulls will just be hoping for an equilibrium. If we pull back less than 50%, that keeps a 2-week trend change on the table. We can also see that while the price is potentially tightening up, look at the RSI here. The 2-week RSI is forming an equilibrium as well. So we'll watch to see how the RSI eventually breaks. So that's just bigger picture, the framework of how I approach the chart on a daily basis. That's what I know is going on bigger picture, and then I zoom in and look at the details from there. So short term, bears have full control. Weak bounce today. We had all major sectors hitting low of the day at the same time. We know that flashing light goes off in our brains. When that happens, some traders say, I'm not trading bullish at all today. And that saves them from fighting the wrong direction. We did end up seeing an hourly oversold bounce. That's not surprising, but it's a potential hourly bear flag at this point. We'll be looking for a 4-hour bounce next time we see one. and we'll look for a 4-hour lower high. So the bears have control on a lot of time frames now, and it's just a question of how long can they keep that control. Definitely very extended to the downside today. So again, bounces wouldn't be surprising, but we have to keep in mind that there's a lot of space now for bounces to just result in daily lower highs the next time we see them. S&P 500 from here can bounce 5% and still be looking for a lower high. The NASDAQ, very similar. Again, the megaphone here, potentially breaking. If we see red tomorrow, then we'll say that that is breaking. Hourly bear flag bounce at the end of the day. RSI very extended, but cooling off a little bit. 4-hour RSI is not oversold. We've seen it bounce from near oversold or just under oversold conditions a couple times, but that just is my reminder, we can always see another leg down. We're not at extremes on RSI on a bunch of time frames, just the real short-term hourly. So again, for me to get interested, if I'm going to play into weakness, I need the daily, the 4-hour, the hourly, all oversold, all at some historical levels. And if we're not there, then I would rather just patiently wait and play the lower highs as a bear, because again, the probability of being able to scout a lower high is much more likely than being able to nail a bottom. The dollar is still way weaker than the market is weak. So again, the inverse relationship, but if the dollar were as strong as the market is weak, right now the dollar would be up here, breaking daily EMA 12, breaking the daily lower highs, and it's not. We're still in a downtrend. So we're keeping an eye on that. It's still a potential falling wedge. We're still watching for the monthly higher low, bigger picture, trying to hold EMA 12, but daily EMA 12 is resistance, and for me, 105.822, 105.82 is the lower high daily level that matters. We did set a lower high here at 105.24, but it was a little dinky level, so I care more about 105.82. But really just daily EMA 12 at this point. And so if the dollar rejects from daily EMA 12 again tomorrow, then we have the potential for a bit of a bounce in the market. But again, bounces is the kind of thing where you can look at the market, and if you want to play bullish, you can wait for an hourly bounce and miss it and be okay with that. I've said this many times, but let's just say Amazon gets a bounce. You want a long Amazon. At this point, the hourly bounce is not convincing. If the hourly bounce, again, you're on the sidelines and you see a big bounce, it's not, oh my God, I missed the move and I should have bought the bottom, I should have bought fear. It's, okay, I see you bulls. You're proving to me a significant enough bounce. Now I'm interested next hourly consolidation. I have a stop level to be going off of, a key support that must hold, and a setup for the potential of an hourly trend change. Because we know with the weakness we've seen over the last 3 days, we're not going anywhere unless we confirm hourly uptrends at a bare minimum as step number 1 for shifting any momentum. So again, just try and fight that urge to want to be buying dips and want to be buying this kind of weakness unless you have proven track record that you are a good bounce trader, and I know those of you are out there, but otherwise there's no rush to be looking long because we have setups that have to develop that give second chances. Semiconductors, daily support coming into play here. So it's a triple bottom, 212.76 is a key level coming into play. And you can see it's pretty much a triple bottom, and we're right on top of it. Hourly is weak. I don't know if anything happened after hours here. Nah, no volume. Whenever I look after hours, you look at the volume, and if it's not a solid candle showing a consistent amount of volume and selling, it's just a little insignificant print. But weak hourly bounce, potential hourly bear flag, daily support in play. NVDA was a lead bear today, but overall, it's still much stronger than most individual names. So keeping that in mind as well. Uptrend support line to be keeping an eye on. Weekly perspective, definitely going to be due for some weekly consolidation. Pulling back, look at the 192 resistances. So pulling back from this resistance zone. But NVDA is going to be another name here. Again, 2-week time frame. If we pull back further from here, can the bulls confirm the 2-week inverse head and shoulders? It's the big question for Q1 2023. Netflix, daily rising wedge we've been keeping an eye on, breaking bear. So the statement was, if the broader market has a bearish reaction to CPI and FOMC, we're going to be looking for Netflix to be a laggard bear. It's been a lead bull in this market environment. And one of the major things that I've learned in 2022 is to be looking for lead bulls to turn into laggard bears. I've never experienced a year-long bear market to have many examples of this playing out. It is now consistent. It keeps happening. So we rejected from monthly EMA 12 resistance, where we are rejecting. It's not an official hard rejection at this point. There was some news that was a factor today and the volume behind it. 275.94 is the next support. So this is step one for the bears. Big check mark. Good job. Now what they have to see is a confirmed daily downtrend. This drop is coming straight from the high of the move. So next time we bounce, there's a lot of space for a daily lower high. But if the bears want to convincingly tell us we're taking over, they have to confirm that daily downtrend. Netflix divided by QQQ is showing us that notable shift into relative weakness. And it's just a question of, does that keep up? Do we keep that up for a while? Tesla green today. So we were able to speculate that Elon Musk was selling shares. And I did that over the last couple of days because of watching correlations. And I'm going to do a specific video sometime over the holidays exactly on that topic. I've got 2 videos in the on deck circle. The first is going into the Atlas trading stuff. And the second is, how did we know that Elon Musk was likely selling shares? It's all to do with correlations, and there'll be some good little info in there. But green today. Why are we green? Because the market looks at that and says, well, Elon Musk is probably done selling shares. Doesn't mean he is. He can definitely keep selling shares. But it's almost like ripping the Band-Aid off and saying, okay, well, we were that weak, and now that's behind us. We were that weak because Elon was selling shares, and now that's behind us. But we need an hourly uptrend. So the bulls would have to break the high of today tomorrow to confirm the hourly uptrend. And then again, keeping in mind, we can bounce significantly and still be in a daily downtrend. Anything under 182.50. We got daily EMA 12 resistance is still over 10% away. So even if we just bounce the daily EMA 12, nowhere near the lower high on the daily in terms of price levels, we can still stay in that downtrend. And again, same mindset. If you're looking long-term on Tesla, you want a long-term position here, you don't have to nail the bottom. Netflix just bottomed and went 100% in the most, and the bottom was the most bearish environment that I've ever seen for Netflix in terms of the headlines and the earnings reaction, and everybody was just tossing Netflix into the trash. And then we ran 100% in the span of 7 months. But look at the bottoming process. Weak bounce, held support, sideways bull break. It took months to develop that bottom and shift the momentum. So again, a news release can come out and shift everything quickly, but in the absence of that, it takes a while for these longer term structures to shift. So even on the daily, you can miss a big old bounce and say, okay, that's a big enough bounce that I'm now interested to try for the higher low, to try for a longer term position. Weekly, not yet oversold. I'll be watching for weekly oversold RSI. I would like to have some Tesla in my IRA as more of a high risk, high reward allocation, because Tesla from here can absolutely drop another 30% and it can absolutely bottom and go up 50% very quickly. We know Tesla is extremely volatile. So I'm not going to try and catch a falling knife. I'm not going to dollar cost averaging in. I'm going to dollar cost average SPY and things like that during a bear market, but not the higher risk, higher reward names. I want to have a level that I can look at and say, that's either the bottom for now. And again, I could look at that for Netflix. Let's just use the example. So, all right, bull break at 207. If we were to lose 164 was support there. I would just use the low 162. If we lose 162, I'm wrong. Then the bottom is not set. But that's way far away. I'm risking a 25% drop before I would stop out. Well, then my position size has to allocate for that possibility. If I want to put in $20,000 to Netflix and I'm willing to risk $5,000 if I'm wrong, and the potential reward ends up being, and I said, yeah, it was 100% bounce. Ends up being, if I enter at 210 and we go up to 320, what's that, 50% roughly? So risk of 25, reward of 50, maybe we keep going up. Anyways, I'm just rambling at this point. but you get the idea. And it's the same thing for me with Bitcoin. Everybody, should we be looking for a Bitcoin bottom? Bitcoin has been in a weekly downtrend for 8 months. If it stays in a weekly downtrend, I have no interest. Prove to me, bulls, that something is changing. Get my attention. Get me to want to buy because a shift is taking place. But it's just not happening on the longer term time frames. So this is the kind of market environment where we need to be patient until those shifts do take place. All right, we got to move fairly quickly here. We're rambling. So Tesla, hourly uptrend needed, daily downtrend clear. Bears are going to be watching for a daily lower high next bounce because there's a lot of space for it. Healthcare is shifting a bit. Double top at the all-time high. And that weekly chart sure looks like it's ready for weekly consolidation. Stair step up for 2 months. So the question that I now have is, captain of Team Bull for our major sectors, the healthcare sector, is it now about to join Team Bear? It did today, losing daily EMA 12 for the first time in 2 months or a month and a half. Losing the daily uptrend for the first time in a month and a half. Again, same deal as what we said about Netflix. Once we find a little bottom, we have to confirm the daily downtrend if the bears are going to prove to us that they're taking over. But let's now see if we're going to see rotation out of healthcare because it has performed so well over the last couple of months. Are bulls going to be locking in profit? Keep in mind, bigger picture, we are absolutely going to be scouting a weekly high or low, and we can use the statement, if weekly EMA 12 is holding as support, the bulls are just fine. There's no red flags on the size of that consolidation. Financial sector, daily downtrend confirmed. Lower high, lower low. So weekly chart, big old pullback. And again, same thing. It was a weekly stair step up. We broke that. That pattern broke at 35.28, and now we're following through with that a bit. So the question is the healthcare sector going to follow similarly? We're going to watch the retracement size here. Do we pull back over 50% or not? Bears always want to see over a 50% pullback. We're in an hourly downtrend, bounce at the end of the day with everything else. We got a lot of space for a daily lower high next bounce. IWM bear break to the lowest level in a month plus. 173 is the next support zone. Weaker overall, but a nice tightening range here as well. Look at, we've been tightening up now for 5, almost 6 months. Top of the bounce, double bottom, lower high. Are we going to hold support and continue to tighten up into early or mid Q1 2023? We'll be watching for it, but the initial bounce retracement has us less confidence in IWM to form a higher low and change the trend than other sectors. It can still absolutely happen, it's just not as confident. And it's been relatively weaker. IWM divided by SPY shows us that we've been weakening over the last 5 weeks. The biotech sector, big red day today. So our 2-day lower high is now set. Again, finally finding clarity in the biotech sector with a low, high, higher low, lower high, higher low. We knew to be scouting that lower high. It's been set, and now it is all about 78.85 and 78.66. Those levels are close together enough that I just default to the lower level. So all I care about from here is 78.66. Do we hold that level and continue to tighten up into the start of 2023? Or do we fall right through it and break bear? Being in no position, I want this pattern to get as tight as possible. This is the equilibrium pattern. The tighter it gets, the more likely we see follow through when it breaks. Why is that? Because the biotech sector, if we just drop straight down here and break 78.66 on this move down, we're going to be oversold on a number of time frames. The 4-hour, the hourly will both be the hourly will be very oversold. The 4-hour will be getting oversold. And so it's possible that we break those supports straight into a short-term bounce. Whereas if you tighten up very nicely, as tight as possible, and then break, nothing's overbought, nothing's oversold. There's more support and resistance levels closer together. So if you break one, you're more likely to break multiple. And that is what you want to see in an equilibrium. If you have no position, get as tight as possible. And so I'm going to be watching the biotech sector for the directional break. And then that's going to determine the correlation that I look for in the biotech sector. If this pattern breaks bull, then I'm going to be looking for bullish entries in the biotech sector when it aligns with the S&P 500 to make sense for bullish entries. If the S&P 500 is pulling back and looking for a daily higher low, I look for the biotech sector for that higher low. If we break bear, it's the opposite. If the broader market bounces on the daily, I'm scouting the biotech sector for a daily lower high because the bears just proved a win to me. So we're going to watch closely how this biotech sector pattern breaks over the next week or two. Geez, this video could be 3 different. And I could go so much more in depth on all these top topics too. We're in flow state today. Silver. Daily EMA 12 support test. Anything above 2202 is a higher low. So clear bear break of the daily inside bar. But overall, no red flags. And again, it's directly inverse with the dollar. The dollar is testing daily EMA 12 support. Silver's testing, dollar's testing resistance. Silver's testing support. Weekly consolidation won't surprise us. Monthly lower high shouldn't surprise us. Whenever the monthly lower high comes, like we know the dollar is looking for a monthly high or low, so we're watching the metals for monthly lower highs. If you're a long-term investor, maybe you missed this whole move. Oh man, I missed it all. The bottom was set. Well, maybe you get a chance for that monthly high or low, knowing we must confirm a monthly uptrend for the bulls to keep conviction. Don't know if that's how it's going to play out, but we're going to be watching for it. Gold is weaker than silver. Daily uptrend lost. Daily EMA 12 lost. It was a rising wedge. We were talking about that rising wedge. I forget when. Probably yesterday, if not the day before. Break and bear. Oil potentially shaping up the daily lower high. We know that's the most likely scenario we're watching for. Still clinging to 4-hour EMA 12 support. But if the low today breaks tomorrow, the daily lower high is set, and then it's up to the bulls. Can they hold the low and confirm the trend change from there? If not, the bears keep their complete control, and we remain in a daily downtrend. And lastly, natural gas. Trying for a daily bull flag. Very nice response to the bulls. And again, never really had a clear 4-hour downtrend confirmed. We have double topped at resistance, but anything above 614 will be a higher low. So fairly sideways at the moment. If we do break bull, it's all about 755. But bull's very pleased with their reaction to the big red day yesterday. Still have resistance in play, but certainly a much stronger day for the bulls. Energy sector, also trying for a daily higher low. We know the energy sector most likely scenario is a weekly higher low, anything above 68, 66. Do we see some rotation? Do we see money leave healthcare and go into energy? We'll see, but bulls have to break this triple top of 87.36 to confirm a daily uptrend. And that's it. Congrats to those of you who stuck through that 23 minutes. It's impressive. Good on you. Check out the free ebook, and I hope you have a great rest of your day. Don't forget to do good things. I've got no content for the end of the video, but I'm going to start recycling content again every winter. I go through the road trip that I went on forever ago, a decade ago. It gets more depressing every year, realizing how long ago it was. But whole bunch of footage that should last weeks and weeks and weeks. I just got to dig it all up and edit it down a bit. But that will be nice and entertaining in due time. So for now, go look out the window.